Every investor dreams of finding a deeply undervalued company, recognizing its potential before the market, making a huge amount of money. It's a big part of what draws us to the stock market in the first place. And today we're talking about Canadian Natural Resources. It's a stock that I think fills all those criteria. I've got an article here today that applies a discounted cash flow model that will shock you. The valuation it finds, the amount of money you could be making on this thing, even just to get to fair value, shocking. But I'm also going to talk to you about a couple of the interesting tailwinds coming. I'm talking pipeline stories, I'm talking economic developments, and I'm talking competitive edge that I think makes this an even better investment than the valuation suggests. So we're starting with this article from Yahoo Finance here, and it's really interesting. It's a couple days old now, but it mentions the fact that a lot of investors have started thinking about Canadian natural resources, mainly because a lot of these Canadian oil and gas stocks have been down this year. If you've been following them at all, you've been following the channel, you'll know we've seen significant declines in a lot of stock prices. Now, some are maybe doing okay, but it was nowhere near the move we expected. Think about all the tailwinds we have going on right now, right? We've got the Trans Mountain Express pipeline. We've got LNG Canada online, right? Like all these things that should have boosted the industry did not have that same effect thanks to a couple of key events. Obviously, we had the tariff storylines. We've got OPEC Plus raising their production outputs. But we've also got some domestic storylines going on. We've got a lot of maintenance going down. Just a bunch of storylines all at once that led to short-term price declines. And it looks like this winter is not going to be much better for oil prices specifically. Natural gas might get a little bit of a reprieve, but the downside is likely to continue for a little while, which means a lot of investors are starting to sort of circle here and think about whether or not it's time to buy, right? And it's talked about in here. You've seen a lot of interest growing, right? And even though there's been a bounce in the last little bit, there have been some interesting stories. It's nothing compared to what it looked like over the last 5 years, for example, coming out of that 2020 crash, or even in that boom in 2022. And investors look at that and they get excited. Now, past performance obviously only tells part of the story. And these guys, they apply a 6-point valuation check. C&Q scored a 5 out of 6. So undervalued in nearly every major analyst measure. So really interesting, really interesting. Now, the one thing that they did that I thought was really, really cool was their discounted cash flow model. Now, if you don't know what that is, it's just a way of measuring the cash flows of the company, applying a discount to it based on a variety of factors. And you can pick more or less whatever you want. There's different ways of doing it depending on what exactly the company does. But the way that they do this essentially tries to find the intrinsic value of C&Q based on some reasonable expectations, some analyst projections, stuff like that, right? And basically they find that free cash flow this year is supposed to be 8.4 billion and it's supposed to grow to about 14.4 billion by 2035. So obviously there's some assumptions going into that story, right? There's some growth baked in there, but that is not insane growth. If you ask me, I think we're looking at even better free cash flow margins in the next 10 years. So I even think this model is a little bit lower. And obviously we'll talk about that later in this video, but it's interesting, right? That you see the sort of growth put in. They're talking about analyst expectations for the next 5 years and extrapolation based on those expectations and the growth models, etc. Right? And they use here a 2-stage free cash flow to equity approach, which incorporates both analyst and longer term estimates to provide a robust outlook. By discounting these, they assign an intrinsic value. And so they discount a certain rate to say, okay, obviously the full free cash flow of the company is not exactly what the company should be worth based on a free cash flow yield, for example. And they find that a fair value, an intrinsic value of this company is 151 Canadian dollars a share. I'm going to just let that sit in the air for a minute. And I'm sure some of you are already on your phones looking at what is the price of C&Q? Well, as of recording, it's about $45. It's in the 40 range. And they're saying fair value is $140 a share, 150, like insane, 150 Canadian, 140, like you are talking a gigantic leap in price. When I say this stock could double and still be within that fair value range, I am not exaggerating. They say that represents about a 67% undervaluation of the shares there, which is wild. Think about that. If I was going to sell you something at a 60% discount with the promise that I'd buy it back from you at full price at some point later in the future, would you not be interested? On top of that, these guys are paying out a 6% dividend. That's crazy value. And so let's talk a little bit about what exactly goes into that. Why is it that this stock is so undervalued? And I think there's a couple key elements here. Now we can talk about price versus earnings. We can talk about other methods of valuation. For reference, I was looking at, I'm making a video talking about Canadian versus US oil stocks. It's going to come out in the next little while here. But free cash flow yield, Canadian stocks are better, right? When you talk about like relative pricing and the sort of the break evens, these guys are profitable and able to sustain their dividend down to a low $40 a barrel oil price. So you think about, okay, there's a bunch of commodity risk. We're looking at the commodity price going down. Maybe investors are pricing in what they expect to be the downside of the commodity price over the next couple months. Well, unless analysts and investors are expecting the price of oil to drop below $40 a barrel, then no, they're not. Because in order for this to be a fair valuation, for the company to be worth less than half of what fair value would suggest, you would need oil prices to be catastrophically low. And obviously, with all of the geopolitical uncertainty in the world, I don't know how long you could rely on that catastrophic low or how much that would actually impact a company like this. Because these guys are on a long cycle of supply. These guys own oil sands assets primarily, and they've done a huge job putting a lot of cash to work and a lot of debt to work, in fairness, to create this massive wealth of oil sands assets that basically require very minimal effort to keep going, are incredibly profitable at a crazy low break even, right? It's a big part of why we're so bullish on them. Okay, so maybe we're talking then the undervaluation is based on fears about regulation. Well, if that was the case, wouldn't we have seen the valuation switch over the last couple of months? And say what you will, right? I get comments from both sides saying that I am taking too far a view to one side or the other. But say what you will about the current government, they're certainly less bearish for the energy industry than the previous one. Now, you might not say that they're perfect, and maybe they're just sort of, giving lip service to the industry. But everybody I know in the industry, and I am here in Alberta right now, everybody I know is more optimistic than they were 12 months ago. Just about across the board. Q4 2024 did not sound as positive as Q4 2025 does. So there's all these different storylines playing out that you could maybe see as a reason for part of this undervaluation. But 60% is crazy. On top of the crazy low undervaluation, I think there's a couple other key storylines that make me more bullish on this company. For example, this is a storyline that we saw just kind of pop up over the last couple of weeks. Keystone XL might be back in talks. We saw Mark Carney talking to Donald Trump, suggesting this. We've seen, back and forth from media personalities talking about maybe they're super positive on this story, maybe they're super negative. But regardless, there is another potential 1 million barrel a day pipeline that is at least in discussion. And then, of course, if you have this 1 million barrel a day pipeline, that's a huge amount of runway for a company like C&Q to grow earnings. That's not priced into analyst expectations, right? That article was written on the 9th. There's no way analysts were expecting a new 1 million barrel a day pipeline down to the States on the 9th. So with that in mind, okay, how much of that could go to C&Q? Nobody really knows. But if you think about who you're looking for a safe, stable supply of millions of barrels a day, it's going to involve C&Q. There's no way to avoid it. So that opens up the potential for maybe new brown or greenfield expansion, right? So either, upgrading projects or working attached to projects or starting whole new projects, opening up huge amounts of potential growth for this company, huge amounts more cash flow, making that undervaluation even more extreme. Now, let's say, for example, maybe you're not bullish on the Keystone XL pipeline. You don't want to see more Canadian crude going to the United States. You don't think that there's going to be demand for it. You think that instead maybe there's other storylines going on there and that this is a bad idea. Well, what about the new West Coast pipeline? Obviously, again, big controversial story. People don't know, is this going through? Is this not going through? But it's another 1 million barrel a day pipeline that is at least in proposals that analysts didn't expect. So even if you're giving this a single-digit % chance, right? Even if you're just about as bearish as can be, that's a single-digit % chance that there are millions of barrels a day, which if you think about the amount of profit, right? We talk about maybe a gross profit margin on a company like C&Q at 50, 60%, right? If you think about what those barrels could represent for them, and whatever their percentage of that 1 million barrels a day, that price increase would be huge. The impact on WCS WTI differential could be huge, right? With the global market demand, we've seen a little bit of this from Trans Mountain. We're going to see a lot more of this from another story I'll talk about in a second, but every dollar there is profit, is cash flow, and makes that undervaluation even more dramatic. On top of that, then there are the long-term potentials of massive economic commitment and redevelopment of the industry and the natural resources sector. And I think the best example of this I've got is the Western Energy Corridor, right? It's that idea of maybe there's going to be this huge port at Churchill. We're going to see, all this expansion up north. We're going to see all of this investment into these spaces that open up even more potential growth for companies like C&Q, that open up even more potential growth for a company that's already massively undervalued. And even if you call this stuff pie in the sky, right? Even if you think all these pipelines will fail, you have no faith in domestic policy in Canada, you don't think we're going to see a move towards investment in natural resources. And I don't blame you for thinking like that. It's so easy to be pessimistic after watching the sector for years. It's still 70% undervalued, and that's still missing what I think is the most important factor for C&Q. Their moat is about to dramatically expand. I think the biggest factor that makes me even more bullish than the folks over at Simply Wall Street and Yahoo Finance is that shale oil is on the decline. Now, I know this is a storyline I've touched on so many times, but I cannot emphasize how important this is for companies like C&Q, because these guys produce the kind of heavy oil that is going to be in high demand in the future, right? Even in a world where you argue there's going to be EVs everywhere and that we're not going to need oil for transport. Heavy oil does so many of the things that are required for petrochemicals, for asphalts, for plastics, right? It does all of these things that are still in giant demand. The other 60, 70% of global oil demand that isn't transportation relies on heavy oil that is produced by guys like C&Q and is refined down in the States. And the more that shale starts to decline and the more that you need more and more Canadian oil, the lower that WCS differential is going to get, because all of a sudden there's a huge demand and there isn't that same supply. And the transportation cost to bring it from Canada is going to seem way better than the transportation cost of shipping it across the ocean. And that's where you see the ball start to roll, where C&Q's assets then get repriced. The scarcity becomes more valuable. The longevity of those assets comes into view when you see that actually in a 5+ year time frame, not only are we going to see these guys dramatically expand their potential, right? Dramatically expand their markets, but also dramatically expand their importance to folks like the US who rely on them for energy independence. And that's the storyline where you could see these guys go from a double or a triple to a 5, 10x stock. That is that long-term undervaluation that investors dream of. And it's why this has become my single largest investment. Because not only do I think these guys are an incredible cash flowing business right now that is dramatically undervalued on many valuation metrics. Not only that DCF model I showed, but many other metrics show these guys dramatically undervalued compared to peers, dramatically undervalued compared to the value of their assets, right? They're not being priced the way I think they should be. But also, they have not one, not two, but 4 or 5 different potential tailwinds over the next 5 years that could take that dramatic undervaluation and make it double or triple what it is already. Could take how insane the value we get on this stock is and make it even better. And that's why I'm buying shares. And that's why, even though I expect shares of this stock to go down as oil price gets worse and sentiment gets worse and the stock market gets shaky, I'm not going to stop buying. I'm going to keep buying at regular intervals for at least the next year, because that's how much commitment I have. I'm not a timing the market kind of person. I don't think it makes sense to buy something, hold it for 6 months, and then say that it's a terrible investment, because those timeframes don't make sense for companies like this. If you want to do that, I would be buying a treasury, or if you really want to gamble on tech stocks, go for it. But that's not the kind of investing that we do here. And that's not what Canada shines at. What Canada shines at is people underestimating our assets, underestimating our companies, and building gigantic moats in the long run that'll turn into huge amounts of value. And not only huge amounts of value, but you're going to get paid a great dividend the whole time. On top of that, we talk about share buybacks, right? We could have a whole nother video talking about the potential return of capital and how that story alone, ignoring valuation, could make this a fantastic investment. So a couple of thoughts I had today. I just really wanted to talk to you. The valuation of these stocks doesn't make sense. And the worse it gets, the more interested I am personally. And I think as an investor, it makes a lot of sense to be looking at if these fit into your portfolio. And I would love to hear if you would like me to cover any other of these Canadian companies. Who else do you want to see a valuation breakdown on? Who else do you think has a crazy value right now, who is being completely counted out by the market and has a great investing story? Love to hear those thoughts in the comments down below. As always, if you like this kind of video, you like what we do here on the channel, please do like the video. If you like covering these Canadian topics and hearing about these stories that don't really get that much coverage, please do subscribe. And I hope I see you in the next one.